Everyone wants to retire early and live the lives of their dreams, but many do not know how. Are you seeking genuine ways to invest and make money so you can be financially free? You've stumbled on the right video. Today, I'll show you a few assets you can invest in that would help you retire early and live that dream life. Plus, I'll give you a few pro tips on how to maximize your profit. So stick with me to the end. These assets are the top money-making stocks right now. I know you've heard about stocks a million times, but hey, hold on a bit before you click off. This time, it isn't just about investing in the best stocks, but leveraging the magic of compound interest in the stock market to skyrocket your earnings in a short time. Wondering how possible that can be? I'll share that with you shortly, but before then, let's talk about these assets that can usher you into financial freedom if you invest in them now. So what are they? 1. Nvidia NVDA. Nvidia's financial success is closely tied to its advanced technology. The increasing demand for Nvidia's high-end GPUs, coupled with the growing need for AI solutions, makes this stock one of the best now. Plus, the company's revenue growth repeatedly exceeds projections, making it a must-have in any investor's portfolio. Nvidia, NASDAQ, NVDA, stands out as the top choice for numerous investors interested in artificial intelligence, AI. This is not a coincidence. Rather, it is attributed to two key factors: unmatched dominance in the AI chip market and a remarkable track record of transforming this dominance into significant revenue growth. The result? A stock that surged over 70% in 2024 alone, making it a leading AI investment choice today. Analysts predict its current valuation may double by 2027. Let's even look past the spectacular 2024. Nvidia's stock has recently beaten the market. This steady growth trend is evidence of artificial intelligence's long-term potential and Nvidia's leadership in this game-changing technology. Is this stock worth investing in for the long term? 41 Wall Street analysts have recently provided their insights regarding Nvidia's 12-month price targets. The average forecast stands at $1,005.59, showcasing a range from a low estimate of $620 to a high projection of $1,400. This average price target implies a 17.18% difference from Nvidia's current trading value of $858.17. Such diverse perspectives from various analysts shed light on the potential future performance of Nvidia's stock. Quite a lot of investors are putting their money into this fine gem. The tech company has been consolidating lately, which might be a prelude to its next big move. I'll advise monitoring the market closely and waiting for an appropriate time to carry out any actions. I'll also advise you to do your diligent research before venturing into anything. 2. Alphabet, Inc. GOOG, Google. Google's groundbreaking Gemini AI model could be a game changer. You might be thinking, this is another AI stock. Well, AI is the future. We have already begun seeing its impact and rapid rise over the years. With all the ongoing speculations, AI might be woven completely into the very essence of our existence. Google continues to hold a commanding 94% market share, solidifying its hold on the online search space, which can be linked to several important elements that have supported ongoing expansion, including the never-ending user base. Honestly, I don't see anyone who does it better than Google. Due to a sharp increase in user adoption, especially on mobile devices, search query volume has skyrocketed over time. As more people use smartphones and tablets to access the internet, Google keeps expanding its services to easily meet society's needs. Moreover, Google possesses an expanding ecosystem of advertisers. A thriving online advertising market complements the company's dominance. Alphabet's rapid growth has propelled its stock price higher. In fact, over the last 5 years, shares of Google have seen an average annual gain of nearly 18%, far outpacing the performance of the S&P 500. So, if you are thinking of retiring early, find a way to include this stock in your portfolio. One thing is certain, Google will be here for a long time. What other asset should you invest in if you aspire to retire early? 3. Uber. The popular ride company is also on the list. This company has managed to spring up and maintain a position in the world of transportation. Analysts expect a spectacular performance from this market leader as it prepares to issue its quarterly earnings report. For investors seeking to venture into this one, a large increase in profits per share, EPS, is imminent. The company is predicted to earn a profit of 21 cents per share, and analysts forecast a startling year-over-year gain of plus 362.5%. The company appears to be operating at full capacity based on its remarkable growth, making it an indispensable asset for anyone aiming to catch out big in the stock market. Beyond profits, the company is thriving in other areas as well. Revenue is anticipated to reach a robust $10.08 billion, a 14.2% rise in comparison to the same quarter of the previous year. Imagine making an annual profit of 14.2%. Definitely, if you apply the rule of compound interest, you can retire within the next 10 years as a millionaire, regardless of how much you start with. Uber surprised investors by surpassing analyst expectations in its latest quarterly report. Initially, the profit margin was projected at 15 cents per share. Uber's performance centered around this estimate. However, the company far exceeded predictions, reporting earnings of 66 cents per share, a remarkable 340% higher than expected. Market Insider recommends buying Uber stock based on its performance. The next asset you should consider investing in is TopBuild BLD. TopBuild Corp., headquartered in Daytona Beach, Florida, is a leading installer and specialty distributor of insulation and building material products. Experts are becoming excited about TopBuild since it is a major participant in the commercial insulation installation and specialty distribution sector in the United States. According to some notable experts, there is a good chance the stock price will rise in the upcoming months. Another indication of the company's promising future is its growth style score of B, which indicates that it is well positioned for growth. For the current fiscal year, analysts predict that BLD's earnings will increase by a reasonable 6.5%. The company's capacity to turn a profit and maintain its financial standing are indicated by this consistent growth in earnings. Additionally, a 5.8% growth in sales is anticipated, indicating rising demand for BLD's goods and services. In the past 60 days, 4 experts have also updated their profit projections upward. Growing confidence in BLD's future success is indicated by this pattern. BLD's average earnings surprise of 12.4% is arguably the most noteworthy. This indicates that the business has consistently outperformed analyst predictions, a strong reason why you should also invest in it. Just in case you're a stock trader who doesn't fancy the growth stock technique and you're looking to dive into something more dividend-related, this next asset is for you. 5. Caterpillar. CAT is much more than simply a common brand. It represents top-tier quality and industrial might. This massive manufacturer of construction equipment presents investors with an alluring mix of strong financials, consistent growth in the past, and bright future possibilities. Caterpillar has paid a cash dividend every year since the company was formed and has paid a quarterly dividend since 1933. With a strong financial health rating of B, Caterpillar has a solid basis for future success. A track record of strong earnings growth adds even more support to this financial soundness. Caterpillar has produced an incredible historical EPS growth of more than 14% in recent years. Analysts have similarly high expectations, estimating that EPS will climb by an average of 12.7% annually over the next 5 years. This steady increase in earnings points to a business that is well positioned for long-term success. Caterpillar has a track record of success for investors looking to outperform the overall market over the long run. CAT stock has beaten the S&P 500 over the last 10 years, averaging a whopping 4.3 percentage point gain annually. This ongoing superiority shows that Caterpillar can provide substantial rewards for its investors. So, if you're looking for a stable and long-term source of income, this dividend-paying company, Caterpillar, is your best choice. Just take a look at its strong financial position, track record of success, and outlook for the future. These stocks are the gateway to financial freedom. However, the earlier you start investing, the greater the potential rewards. Let me explain why time is your greatest ally in the stock market. The stock market is like a roller coaster of ups and downs. However, history shows that the market trend tends to always increase over a long period, which means the earlier you start, the better. Starting early allows your investments to ride out the inevitable dips and benefit from the overall growth circle. These dips create an avenue for a strong buying opportunity, averaging down your cost per share. The longer your investment horizon, the more temporary fluctuations affect your overall returns. Starting early frees you from the burden of wanting to always see immediate returns. You can always invest long-term, focusing on a consistent, disciplined approach rather than chasing short-term goals. You might want to ask, how much is the ideal amount to start investing? There is no perfect answer for that. Simply start with how much you can do away with. You don't need to break the bank to invest in stocks. Remember that even small investments can make a big difference over time. You just need to start now. While investing might be good, it is important to understand that you mustn't put all your eggs in one basket. Diversification is the best way to secure your funds. Diversification means spreading your investments across many assets, creating security for your money. This way, you minimize risks and safeguard your financial future. Let me explain why diversification is important. Firstly, the stock market can be highly unpredictable. A certain asset class might be booming in one moment and crashing in the next. Diversification across asset classes like stock, bonds, and real estate investment funds, REIF, helps you mitigate risk. Secondly, imagine your portfolio consists of only tech stocks. Something bad happens within that industry, and all of your hard-earned money will go down the drain. Rather than retiring early, you'll be working for a longer period. These are some of the reasons why diversification is good. Thank you for staying with me until the end of this video. I look forward to seeing you in the next one. Keep investing